Thanks to Imarticus for giving me this opportunity, and welcome to all the attendees today. So that's a good proportion in terms of experience. I see that almost half of you are from financial services. So I think what I will be talking probably will make sense, and half of you are from technology, or at least one quarter of you. So that's good to know. I don't know the distribution of the rest of the others, but I will try to keep this in a very fundamental fashion so that it is very basic and everyone on the call can understand what I'm talking about. I will try to use less jargons as possible, even though I see a mixture of technology people here who should understand the technical jargons, but I will try to keep it as layman as I can. As she introduced, my name is Vinay Solanki. I'm working in the industry for close to 13.5 years now. Spent a considerable time with Goldman Sachs, almost 8 years, where I was handling the technology part of trading, sales, and on also a part of financial technology in terms of algorithmic trading. And recently, in my previous stint, I worked in area of mobile money and mobile wallets, which is very closely associated with the fintech industry that is booming right now, not just in India, but across the world. So let's move over. What we will do today, so let me know if you are able to see my screen properly. And if not, then you can let me know. I can just share it again. Basically, today we are going to talk about, this is the agenda. We are going to talk about the need of technology in BFSI. We are going to talk about technology in banking services. So basically, when you go and you do your day-to-day banking, what is the role of technology and hence fintech in your day-to-day services such as banking, insurance, or financial services? We will also touch upon blockchain and the role of blockchain in fintech area, specifically with the example of cryptocurrencies. Then we will briefly talk about robotic process automation. So basically to tell you that what role automation plays in the financial services industry or in BFSI. So just to let you know, BFSI stands for banking, financial services, and insurance industry. Okay, and then we will wrap up with markets and ecosystem. Just to let you know what we will do, we will also cover artificial intelligence and the role of machine learning as we touch on some of the topics as we move forward, because these two technology play a very critical role in fintech. So moving forward, um, before we talk about the role of financial technologies or technology in financial industry, let's understand what are the typical challenges that we used to face in the traditional BFSI industry as a consumer, as a customer, and also as a provider. So for example, if I'm a bank, if I run a bank or if I run an insurance broker agency, then what are the challenges that I might face if I'm not adopting technology? And what are the challenges on the other side of the border, which is more on the consumer side or the customer side? Very important. And the first one is transparency. So we all know that when you not in today's date, but in the past when we used to go and get a loan from a bank, it was very hard to understand what are the typical evaluation criteria that they have used. So for example, I'm working professional. I earn a particular salary of few lakhs, and say I have a good credit record. I have taken a loan in the past and I have repaid it properly. Based on that, they might come up with certain percentage in terms of the interest rate that they will offer me. But it's very hard, or it was very opaque to me, where I could understand really how they're evaluating me as a customer, and how are they benchmarking me, like how are they comparing me with other customers of the same bank, and how are they coming with the interest rate that they will offer to me. Typically they will come up with a particular interest rate and then we will negotiate back and forth, but it was very hard to understand what is going behind the scene. Okay, so transparency was always the challenge, and it is still a challenge to a certain extent, and we will touch upon that. Second challenge was mobility. So I think this was a very important area where when you do services with your insurance company or with your banking service provider or with your bill payment provider, all these channels were operating in a fragmented fashion. For example, if I want to take a loan, I have to go to a specific loan servicing branch of ICICI, right? Not all the branches of ICICI in India service loans. But if I want to do a regular payment, or if I want to go and deposit a check, or if I want to withdraw money, I can, before the era of ATM, I can just go to the bank branch and withdraw the money, right? After the ATM came into picture, a lot of things became smoother for us because we can just go to an ATM nearby, and withdraw the money or deposit the money or deposit a check and maybe check our bill statements and mini statements like that. But even then, the mobility was not very handy. Before the smartphone became much more popular for all of us, and we started using our banking apps on the smartphone, which is actually the technology that came into play after a smartphone became ubiquitous or actually more widely available to all the audience. Third is pricing. So expensive products and services. So in traditional industry, when the banking and financial were operated, or even investment banking or trading, the products were priced at a particular rate, which was typically higher. So even if you go and deposit a money, your FD rate was much lower than the rate that you will pay for getting a loan from the same bank. So they used to earn a quite a big margin in terms of what they are paying to the people who are depositing money with them and what they are offering to the people who want to lend money from them. So basically the banking operations runs this way, right? You take money from a set of people and you lend money to another set of people. It could be a people, or it could be a company, it could be an organization, or it could be even governments. Okay. So there was I think there was because of the issue in the transparency, it was hard for me as a customer to understand whether I'm getting the right price point for my services. The speed of transactions, of course, before ATM or even after ATM, when you transfer money to someone in India, it used to take at least 3 to 4 days, or sometime maybe faster, maybe 2 days or so, before things like IMPS or RTGS or NEFT came into existence in the technology adoption for financial industry. Um, Process such as KYC. Even recently, before Aadhaar became really popular, or fingerprinting and other technologies such as PAN card and things like Aadhaar number, which is getting linked to your banking account, the KYC for any process that you get from your banking provider or insurance provider was very manual process, right? I think you can agree with me that we used to sign a lot of documents and pages and give a lot of documents such as our Aadhaar proof or ID proof, address proof, and etc. And we even do it today. It has not gone completely out of the picture. Some part of the process have become automated or at least digitalized, but a lot of part is still very manual in terms of how they know their customer. That's why KYC stands for Know Your Customer processes. Literacy of customers in terms of understanding the financial industry. So for you and me, in the past, for if you're not in the financial services industry, or if you're not actually in the area where you understand finance and you're a regular customer, there was hardly anyone actually going and educating you about financial literacy, about investing in mutual funds, about investing in markets, about actually not looking at FD as the only option of saving money and getting some interest on your money, or even basic literacy like how do you lend, how do you borrow, and what kind of management you can do with your financial investments or the wealth that you possess. So that was very low before fintech became popular. And now, of course, with enablement of smartphones and different financial products out there, for you and me as a customer, we can go online and read a lot about this aspects. And last and most important are the risk and the frauds. So I think we all are aware of what happened recently with Punjab National Bank, right? Where they gave a big credit line to one of the diamond trader, actually without doing a proper check of how much he's really borrowing and how much the company will be able to repay, or are they really paying. Or if you go back few years in 2008, and if some of you might have heard about the Lehman Brothers crash that happened in US, which was one of the biggest investment bank of US and one of the oldest. It became so big actually that it ended up failing because it took wrong bets and it was not able to manage its risk properly, and the government also did not come in to rescue it. But that ended up causing a kind of a recession in US and also in other parts of the world, because there was a big fallout that happened after Lehman Brothers. So one of the area that financial technologies or things like improving transparency and improving mobility or improving literacy actually helps to a certain extent to keep this kind of issues in check. So on the left hand side, you see a picture. I think some of you might have watched this movie. It is a typical example of what goes on in investment bank and what kind of greed plays in there. Okay. So moving forward, this is the umbrella of financial technology. So if you see on what is basically shown here is all different kind of products or different kind of verticals which come under fintech area. All the way from your left hand side, when you look at the bottommost, lending, which is your simple lending and borrowing business, then blockchain or cryptocurrencies, regulatory technologies, which is audit, risk, and regulatory compliance softwares. Then personal finance, for example, tools to manage your bills or track your personal total savings in your different bank accounts, or looking at your credit reports and stuff like that. Payments and billing in the services, which is basically making payment and billing for your services like your telephone bill or maybe your credit card bill and things like that, and as well as the softwares around it. Insurance industry, it's a very important player in the BFSI segment. And I think it is slowly adopting technology, but it is one of the industry which is very late.
Hello,
Hello?
Vinay.
Yeah.
Yeah, can you hear me, Vinay? I think this viewers are not able to see your slides. So can you share your
Oh,
screen?
I've already shared my screen. One second. One second. I'm sharing it once again. Huh? Hold on.
Yeah, yeah.
I'm so sorry about that. I didn't realize that they are not able to see my screen.
It's okay, Vinay.
Can you see my screen now? It's called as Umbrella of FinTech.
Yeah, thank you, Vinay.
Okay, great.
Yeah,
Uh,
you can continue.
okay. Okay, thank you. So yeah, so now coming to, hold on one second. I'm going to full screen this. Just let me know if you are able to see my screen. I think there is some issue going on with GoToWebinar where it is automatically stopping my screen share. Are you guys still able to see my screen?
Yeah, we can able to see now.
Okay, great. So I was basically covering that. Let me just cover this slide once again, Umbrella FinTech. Basically, this slide talks about the different areas where financial technology can play a role, which is starting from lending to blockchain, regulatory technologies in financial industry, which is auditing, risk management, and compliance. Personal finance, which is for managing your bills, for example, making a payment of your telephone bill, of your utility bills. So that also is covered under payments and billing umbrella. Then comes insurance segment, which is basically the companies which are selling insurance, or there are reinsurers who are basically selling insurance from as an aggregator. What kind of technologies are they adopting? And we will touch upon that as we move forward. Capital markets, which is basically the sales and trading, stock market, fixed income market, or smaller instruments like bonds and equities, and money markets instruments, which typically is managed by companies like Goldman Sachs or Barclays and so on. Investment and wealth management platforms. So this is typically true for people who are high net worth individuals or people who want to use a wealth management service so that their finances are managed properly. Then money transfer and remittances, which is typically very popular in the consumer segment. So if you look at Paytm, where you're allowed to transfer money from person A to person B. And then the last is, of course, mortgage and real estate industry. So that all industry also has an important aspect where there is a mortgage lending, mortgage evaluation, EMI payments, real estate checks, and etc. are done. Okay. So this is the umbrella of fintech, which we are going to cover briefly today at a summary level. So let's first talk about the banking services, and let's look at banking services from the lens of financial technology. So I think we all have started using ATM for some time now. We all have started using things like Paytm, MobiKwik wallets for some time now. Our banks like HDFC, ICICI, and other banks, they also provide us a mobile app through which we can do transactions. We can transfer money, we can look at our mini statement, we can pay bills, and etc. So banking as an industry has actually transformed, or in fact, I would say disrupted, because of the products which have come into the market, and typically they have been built by smaller organizations. Okay. Now, if you go forward and look at one of the area which is very popular for customers is online payments and remittances, right? Or actually things like making a payment using a credit card or your debit card. What does this really means in terms of a definition? It's basically a mechanism of transferring or transacting digital money through a digital medium such as mobile phones or maybe your laptop or desktop browsers, where you go and log in into your banking site or maybe other services like your bill payment sites of Airtel mobile bills. You can also do that through SMS. Okay, there is a facility where you can transfer money through SMS. You can make bill payment through SMS, or something called as USSD. I don't know how many of you use USSD. It is one of the medium on your mobile phone where you can punch in some numbers, and one step at a time you can punch in a code which allows you to make a transaction. So you can say, I want to transfer money to someone, then it will share a screen back to you then saying that, hey, press 1 now, and then enter the mobile number that you want to transfer the money to, and so on. So it's one of the mechanism which are used in by the telcos like Airtel, Vodafone, Idea, and so on. I don't think Paytm or other companies can support USSD because it typically works on a mobile gateway channels. Okay. Other things that you do is you avail loans, you earn interest on the money that you deposit in the bank, you pay bills, you transfer funds, and etc. So typically, if you look at markets, let's look at a market in Africa like Kenya, Tanzania. In these countries, actually, the penetration of banking channels, like the core banking services, are lower compared to a developed economy. So even in India, it has now become very, I think, widely implemented in terms of banking infrastructure, even to the tier 2, tier 3 towns. But even if you go to rural areas of India, like remote areas, tier 4, tier 5 towns, you won't find a banking branch. Maybe you will find a post office which can support some form of transactions, which are financial transactions like sending money or wiring money and etc. But if you go to countries like Africa, they are even far behind. Like I have been to many of those countries where I've seen that the penetration of banking, ATMs, and other services are very low, and that those are the countries which has adopted mobile payments or mobile phone as a medium of transactions for doing all these things like availing a loan or earning an interest or even paying bills. And it has become very popular there. I think that's where the revolution of mobile banking started, and then it slowly spread all over the world. Now, if you come to India and if you look at on the left hand side at the bottom, you see all these names like Paytm, MobiKwik, PayUmoney, Citrus, etc. Right? What are these? These are nothing but an organization which are given a certain license by the regulatory in India to operate payments and remittances services, and also, of course, to provide other services like paying your bills and etc. Okay, they are not banks, but recently, I think you must have heard a term called as payment bank. So Indian government came out with a license where they gave and they allowed some of the authorities or some of the organizations like Paytm, Airtel, Vodafone, even Cholamandalam to actually open a bank called as payments bank, which are not typically your traditional banks like ICICI or Kotak Mahindra, but they become more like a channel to actually reach out to the customers which are not able to access your traditional banking channels. So what they do is they give you a platform either through a mobile phone or maybe through a browser where you can do all the services. But not just that, very important is that you also can store money in payments bank account up to 1 lakh rupee, and you can earn an interest as high as 7.5%. So if you open an Airtel payment bank account, you get an interest of 7.5, which is even higher than the fixed deposit interest rate for with certain banks. So it has actually revolutionized the way that Indians or developing economies and even the developed economies do transactions. So if you go to US, you find a lot of companies which have become very popular, like Stripe and so on, which provides payment gateways and other services. So on your top left hand side, what you see is a payment processing ecosystem as of 2016, and you see major four categories there, right? You see the acquirers and processors. So these are basically the core banking companies like Chase, Citibank, and so on, which provide you banking services or credit cards and other things. Then you see the card network companies, which are Visa, MasterCard, American Express, which act like the main gateway to allow you to use your credit card anywhere you go, whether you're booking an airline ticket or you're actually going and paying some bill or utility, or you're transacting at a petrol pump. So what they do is they create that ecosystem of merchants and retailers which can accept this form mode of payment, which is either Visa, MasterCard, and the likes, and they do the settlement with the banking companies. Then you have issuers which issue those credit cards like Citibank, Chase, PNC, HSBC, etc. You have gateways which actually act like a medium that transfers the money from one point to another point. This is more technical in nature, so I won't go in details of gateways. But if you pick an example of Stripe, which is one of the very popular company, it has got good funding. They act like a gateway of transactions from say for example, if Vinay wants to transfer money to Joy, in that case, the transaction will be happen through a front end medium like Paytm, but in the background, Paytm might be using a gateway to settle that transaction. So in India, there is something called as bill desk. It's a very popular gateway of transacting money. Even Oxygen, for example, acts like a gateway to a certain extent. Okay, and also a wallet. So online payments and remittances is one of the area which I think is very popular. It's very user friendly, customer friendly. It has given a lot of avenues for people to come online or to actually come in the banking ecosystem. Okay, moving forward, let's take a look of a recent articles in Times of India that I came across. Now, if you look at things like starting a business in India, which has become more friendly right now, one of the area which helped simplified starting a business in India was, if you see the one that I've circled with red color, introducing an electronic systems for tax payment. So one of the area that was really a burden or something that involves a cost and time was settling and making payments of your tax, which could be a corporate tax, your service tax, your property tax, and so on. So for anyone who is doing a startup, they don't want to bear with the headache of all this kind of transactions that are more manual in nature. So government launched a system where they can actually go to a window and use companies which are out there, which have created products for tax payments through an electronic medium and made it easier for people to make tax payments. And in that process, you actually save some money, and more importantly, you save time. As a startup, you don't want to be bothered by every time doing all these basic things which are more frequent in nature, because you have to pay your taxes almost every quarter. Let's look at the right hand side. I don't know if how many of you recognize this person on the screen. He's the founder of MobiQuick. So Bipin Breet Singh, he actually started MobiQuick started even before Paytm came into existence, and it is now very popular medium of payments and other utilities and services. So I think the picture shows it's like a grocery store where you can go and pay using MobiQuick for your grocery purchase. One of the important area you should highlight is there are 40 million merchants which are still uh, operating in India, and they are yet to go online and use some kind of digital payment transactions or payment mode. So we all know about demonetization, right? When demonetization came into play, suddenly companies like Paytm and other wallet companies became very they benefited from it, because government enforced that people should not use cash, and they should go and use a digital medium of payments, so that actually more money can come into the banking system. Actually, one of the statistics says that India's underground economy, which is cash based economy, which really where the money does not even come into the banking infrastructure or in circulation, is much larger than the money that is in circulation in the banking. And I think that's a disadvantage, right? Because if more money can come in the banking infrastructure through digital medium, the country can progress much faster, because there will be more liquidity, and hence more money to lend by the banks, and maybe lower interest rate for people to borrow the money from the banks. That will spur the economy further. Moving forward, there are some more examples, right? On your left hand side, Faircent is a company that allows you to avail personal loan as low as 1,000 rupees and as high as up to I think 5 lakh from another peer. Okay, what is going on here is it's called as P2P. P2P stands for peer-to-peer transaction. So for example, if I have some money and I want to earn some interest on that, what typically I can do traditionally is go to a bank, create a fixed deposit. Or in India, which is very popular, we all know that you go and lend a money to someone in your friend and network, and you earn some interest rate of 2 rupees, 2% per month, right? But that's very unsecured. That's very risky also, and it's something that needs a lot of management, right? By you as a person, if you lend to 10 different people. So companies like Fairsend have come into existence, where what they do, they act like a broker or a middleman. They go and they find customers who needs money as small as 1,000 rupees or 5,000 rupees. But what they do is they create a credit score for you. Okay, so for example, let's say one of you want is a first time customer coming to Fairsend. What they will do is they will create a score for you. They will ask you to share some data, maybe your Aadhaar number and your PAN card ID and etc. And they will also go and look at your social media footprint, and maybe other things around you to create a score using some artificial intelligence or machine learning model, where they will say, hey, Vinay is a person who actually is very frequent on social media. He frequently looks at news sites or reads stuff on financial transactions, and I can see maybe he's a technically savvy person, and he has a good network of friends and family. He doesn't have any negative reviews about him, maybe in some other mediums such as customer reviews or feedback reviews. And then he will look at my credit score from maybe some credit scoring agency who might have some number around me, and they will combine that, my social media footprint, and maybe some other views around me, and create a calculated score, and then determine that Vinay can take or borrow up to say 10,000. Then they will find a lender who is ready to lend, uh, and then they will do a matchmaking basically, and give a particular interest rate. And I think in that process they will earn some commission in that process. uh, I think this is better than actually just lending in a market which there is no one to do a brokerage or a matchmaking and some kind of a feedback and a background check on the borrower side. This has become very popular in India and worldwide. On the right hand side, if you see an example, fintech startups have actually sold 1,000 kilogram of gold in 10 months. So one of the example is a company called PhonePe, which started selling gold in December. They have sold more than 250 kg of precious metal, and they have approximately 4 million customer. Okay, so I think traditionally gold was transacted pretty much in the brick and mortar stores, where you go to your local sonar, your local goldsmith, who is pretty much familiar to you, and you are familiar to him, and you transact with them offline, right? But then at many places or many time you want a convenience of actually transacting, either buying or selling gold online through a digital medium, and that has become a very good market for India, typically because we all know that India is a country that consumes a lot of gold, silver, and even diamond, because of our culture and the tradition that we spend or we buy a lot of gold during marriages and other ceremonies. So there is a lot of demand of transacting gold every now and then, buying and selling. And I think companies like Paytm or PhonePe, they have taken the advantage of that demand and use their medium, their channels, which is their either their mobile phone or their partner channels and merchant channels, to give you such a service. Okay, one of the number I want to highlight here is more than 60% of all gold purchases on Paytm are from tier 2 and tier 3 cities. So I think it's an important point. Even if I think you guys must have heard that e-commerce is actually picking up very rapidly in tier 2 and tier 3 cities, even tier 4. And Amazon or Flipkart, actually now no more Flipkart, Walmart, sad to say that, they are going to attract the customers in those cities, because they don't have a medium like us or a convenience like us who are living in metros to go and just go to a next store and buy a grocery or go to a bank branch nearby. Okay, so moving forward, I just want to give one example of Uber. We all have used Uber as a ride sharing company, but what is happening in US? Um, there is a term actually today. Whenever you talk about any startup, a lot of startup use Uberization as a word to talk about their business model. And one example that is happening in US is where the driver who supposed to become an Uber driver, there is a mandatory requirement to have a bank account and a debit card. Uber realized that even 30% of the new drivers in a country like US did not have any bank account. That's a surprising statistics, right? If someone tells you that in India 70% people don't have a bank account, or 60%, you might believe it. But in a developed world like US, 30% of the people probably who are actually in the category of the level where they can take a profession like driving and other things didn't have a bank account. So what Uber did, they actually partner with the banking companies, and anytime you come and become an Uber driver, automatically in the onboarding process, they will open a bank account for you with their partner bank. It could be some partner bank in US with Uber, and maybe you will just open a checking account with some minimum balance on it and get a debit card. So what I'm trying to highlight here is, it is not just the financial industry that is getting disrupted or is actually impacting the financial services area, but it also the tangential services like Uber, which is like a ride sharing company, can have an impact on the banking services. Yeah, maybe tomorrow Uber might open its own bank and ask all the driver to open a bank account in an Uber's bank instead of actually partnering with someone else. So that's a good example, right? Moving forward, this is a study by NASSCOM in India. Basically, there is a rising collaboration happening between banks and the fintech startups in India. So what you see are the examples of big banks like ICICI, Kotak Mahindra, RBL, SBI, where they are actually investing or partnering with companies in payments industry. They are also partnering with companies in blockchain, and we will talk about blockchain in a while. They're partnering with companies in the P2B lending space, like the one we just spoke about, Faircent. They are partnering with companies in paperless onboarding of customers. So someone who can help you to do automated KYC instead of using paper-based KYC. Maybe an iris scanner or an eye scanner coupled with my Aadhaar ID and things like that. They're also partnering with companies who are providing real-time credit decision. So on the left-hand side, you see Kotak. They partner with Credit Seva, which actually helps them to do credit analytics. So what Credit Seva does, it's a company that creates a credit score for you and me as a customer by using all those example I gave you, like my Aadhaar ID, my PAN card, or maybe some kind of, even if I don't have a PAN card or an Aadhaar ID, maybe they have ways to go and look into my bank accounts and calculate a value of my savings, or maybe they can go and do some kind of a social media footprint and understand whether I'm a farmer and have I taken a loan from a landlord in my village, and is there a possibility where I can find some kind of a medium to understand that whether I was able to repay that loan or not. Okay. And in fact, they are going to this tier 2, tier 3 towns, and they are trying to bring people like in the farming industry, agriculture industries on board onto their Credit Seva platform, so that they can collect more and more data points and create better credit score for everyone. So if you see this chart here, it paints a very important picture. The picture here is that fintech is actually booming, number one. Second, fintech is disrupting everyone. So all the traditional bank have realized that they cannot anymore stay as a brick and mortar or a bank with just a brick and mortar and a mobile app. They have to start thinking about financial technology as a medium of reaching their customers through multiple modes and also providing more transparency to their customer. So for example, Rupee Power, right? They help you to do real-time credit decision making by collecting some data points about the customer, and the customer could be an individual customer, or it could be an SME, or it could be an agriculture farmer, or it could be a big organization. So they all have some mechanism to capture data points and create or calculate a value for them. So that's about the banking side of the world. Moving forward, I just want to highlight the report that was done by, or research done by Accenture in 2014, where they mentioned, they asked question about branchless banking. So if you were to switch your bank, would you consider a bank with no branch location? And typically the younger population between 18 to 34, 40% of them were okay to switch to a no branch location bank. In age group of 35 to 55, around 30%, which is huge. And in the older generation, it was approximately 16%. But what you should get out of this is that there is a growing number of people who don't care anymore that whether I need to go to a brick and mortar bank and do my transactions. In fact, what should happen in the future is that you don't need to leave your home to do any banking transactions or any transaction which are related to banking, financial, payments, remittances, and etc. In fact, there is one more chart that they prepared, a very interesting one. This is about the percentage of customers which would likely bank with a non-banking institution. So, for example, I spoke about Paytm, right? Likewise, there is a company called PayPal. PayPal is a very old company. It has been in existence for very long, and we all know Elon Musk was part of it, the guy from Tesla. So these are not traditional banking companies. They started in a different way, but what this report is showing is the customers of T-Mobile or Costco or Apple or Google, they are comfortable, they are familiar, and they are ready to do business in terms of banking transactions with these companies instead of just going to the traditional banks. And Apple and Google, for example, we have Apple Pay, we have Google Wallet. Amazon have its own payment service called as Amazon Pay for transacting on Amazon website, and likewise. So these companies are actually giving you medium to transact without thinking of a traditional banking channel. There is another area, alternative lending. I think we spoke about this when we spoke about FairCent. So Lending Club is one of the company which actually got a lot of funding. It is not doing good now, but they came out with a statement which was very important. They said that the banking system, we are trying to turn this system into a frictionless, transparent, and highly efficient online marketplace. So you remember the challenges we touch upon, which are having low transparency, less speed, low visibility, and so on. What Lending Club did is they started this platform for P2P lending and created an online marketplace, which evolved into where people can do more than just lending and borrowing. They were able to help people to achieve their financial goals on a day-to-day basis. They can borrow faster and cheaper. Okay, whether they are taking a loan or they are taking some kind of making any bill payments and etc. And they want a smaller credit line. So Lending Club help them to do that. For example, say you want to pay your let's say a credit card bill, and typically you're running out of money right now for this particular month, and you want a quick loan for a short-term basis, just for maybe 15 days, because your salary is going to come in 15 days. You can actually go to Lending Club and get that loan, pay your credit card bill, and they will just probably deduct your amount from your bank after 15 days when your salary is credited into your account. Likewise, in India, there are a lot of companies which are making payments or giving you services like taking advances on your salary, right? So there is a company called as Lending Card. They are doing very well. One of the company. There is another one called as Avail Finance. You can actually get up to 200% of your salary in advance from Avail Finance. So this report by CB Insight, they say that in Asia, the alternative lending deal continue to shift away from China. India is seeing a spate of alternative lendings, such as Lending Card, which got a recent funding of $87 million. Avail Finance got a funding of $17 million. Likewise, Early Salary and Rupeek, they got investments because they're able to bring new set of customers into the financial technology channel. Of course, China is doing even better than us, but I think we are doing and we are catching up very fast. So alternative lending has opened up a new set of business and a new set of opportunities for financial companies to get into. So if some of you are in technology or in financial companies, you can look at this industry as well. So that basically covers the area about banking and financial industries, the typical banking services. But let's talk about a term called as blockchain, and then we'll talk about cryptocurrencies. So I will go a little slow here because I understand not all of you all might have heard a term called as blockchain, but let's try to understand fundamentally what it really means. So what is blockchain? So before we even talk about this definition here that I have, let's think about banking industry. What happens in banking or in any industry where there is a centralized mechanism of settlement? So for example, a lot of people go and open an account in ICICI Bank, and then ICICI Bank becomes a medium or a company where you can actually park your money, so store your money in their savings account, and then you can go and make a bill payment to someone, right? Or you can transfer money, or you can borrow. Okay. Now, when you transfer money from person A to person B, what happens is that ICICI act like a broker or a mediator, which says that okay, Vinay is transferring money to Joy, who both of them have an account in ICICI, and then when I make my transaction, the money is debited from my account. There is an entry made into a database, okay, a centralized database, and then another transaction happens where the money is credited into Joy's account, and again an entry is made into a database. Okay, so the database will have two entries. Vinay transferred money to Joy, so debited say 5,000 rupees from Vinay's account minus 5,000, and then there will be a plus 5,000 into Joy's account. The point to note here is that there is a central authority or a centralized system which is responsible to do and handle this transaction. Okay, number one. Number two, nobody other than Vinay, Joy, and ICICI and maybe RBI knows about this transaction. Okay, okay. Number two. Number three, ICICI as a central authority becomes a single point of failure in case something goes wrong. Let's say the credit did not happen properly or the debit did not happen properly. Okay, and then that the transaction will be retried by the bank. However, at this stage, there are only 4 or 5 stakeholders, right? Which is the two people who are transferring money to one to another, the centralized authority, which is bank, maybe the regulatory, which is RBI, the financial regulatory, and maybe an underwriter or someone who's ensuring that money in the bank. Okay, 4 or 5 people. What happens is the trust is actually given to a single authority, and tomorrow if the authority becomes rogue, like let's say Punjab National Bank wants to run away with the money of everyone who has saved the money in their bank, it won't happen typically, but let's assume a case. Or maybe Lehman Brother, it got basically crashed completely, and there is no more a company called Lehman, right, in existence. They suddenly were not able to manage the risk and pay the money to all the lenders or to the people who had done trade with them. So what happened is in that medium there was lesser trust, there were lesser number of parties, single point of failure, and a difficulty for people to have transparency. So that's where a mechanism evolved with the technology that was invented by, actually nobody knows who is the inventor. People talk about a guy called as Hiroki Nakamoto. People think that blockchain got invented in Japan, and maybe that is true, but actually there is no clear-cut answer anywhere. But what happened is they realized that instead of centralized, what if I create a distributed database where all of us see everything, okay? We all know what is going on in the system, okay? So that means there is no centralized trust mechanism. It's basically decentralized, uh, and it is much, maybe it is faster, maybe it is something that is immutable, it cannot be changed. Okay, for example, in ICICI, if someone wants to do something wrong, although it's not possible in today's age, but still there is might be a database administrator who can go and change some entry in the database. So blockchain actually gives you a mechanism where you can actually create a distributed mechanism where if say now Vinay and Joy wants to transfer money to Vinay wants to transfer money to Joy, taking the same example, Vinay will have an identity in blockchain system, which will be say number 123, and Joy will have a user ID say 456. What will happen is once I initiate my transaction, the system will know that 123 wants to transfer 5,000 to 456. Okay, there will be a page that is created where an entry will be made of a transaction that 123 is transferring to 456. Okay, in that page you will basically create a hash key to store that entry. Okay, and then you will execute the transaction, number one. But when you store the transaction, what will happen that the transaction or that page where the transaction is recorded will be copied and replicated in all the servers which are part of the blockchain system. So typically in a blockchain system, in a public blockchain system, it is a digital ledger that is maintained, okay, where everyone on the network, if there are 100,000 computers who are taking part in a blockchain ecosystem, they are able to see that transaction because it will be replicated, number one. And then new transactions are created and stored on the same pages. Once the page gets full, it is added into a block. Okay, and once that block gets full, a new block is created, and the page starts getting linked with one another. And that's why it is called as blockchain, because what you do is you create a blocks of pages where each page has a transaction. Okay, and the transaction could be money transfer, could be anything, and each of the transactions has a cryptographic key attached to it, or a hash key that is very hard to break, and it is calculated by a chain of computer. That's where the term comes. Using cryptography to keep exchanges secure, blockchain provides a decentralized database or a digital ledger that everyone on the network can see. The network is essentially a chain of computers that must all approve a transaction before it could be verified and recorded. So that's the important piece here. If there are 100,000 PCs, then all of them should approve the transaction. Technically, it happens in a way which I think we won't touch today. It will be too much for you guys. But the key point is that blockchain has created a new concept where you can share publicly the transactions. Okay, so that's why it says shared publicly. There is no central authority to approve transaction. The database is immutable, so nobody can go and change that transaction after it is recorded. It is practically irreversible. It is trusted because there is distributed nature, and there is a consensus algorithm that is created to make sure that every transaction that is recorded has a unique key. And lastly, it is automated. The software is written so that conflicting or double transactions do not become an example there. moving forward, what is cryptocurrency? So why blockchain and then why cryptocurrency? So blockchain basically is a technology. Now, what is cryptocurrency? It's an application of blockchain which says that it's a digital asset used as a medium of exchange of value. So you guys have heard of Bitcoin, very popular, right? It became one of the first example of a cryptocurrency that became very popular, highly transacted worldwide, and in demand. People were able to pay in bitcoins if they were gaming, or if they were playing a multiplayer games, or and if they wanted to pay each other. Basically, what happened is cryptocurrency uses a technology called cryptography, right? You secure the transaction and you control the supply using a cryptography. So you don't create Bitcoin every now and then. You actually have a controlled way of creating cryptocurrency. It basically becomes like a currency, but in a virtual world. It's not a real currency like a rupee or a dollar, but it becomes an alternative mechanism for people to transact with each other. In fact, Bitcoin, it came first in 2009. It was the first decentralized cryptocurrency, and after which actually there are multiple cryptocurrencies that has come out in the market. People are actually creating cryptocurrencies to support multiple use cases, I would say. So if I just show you this snapshot here, there are typically more than 100 cryptocurrencies right now in the market. Bitcoin is, of course, one of them, which has a very good market cap, approximately $146 billion, and Ethereum, Ripple, and so on. The important point here to understand is the cryptocurrency is a virtual medium of transaction, or maintaining a digital asset, but it could be anything. For example, I could actually create a cryptocurrency to support gaming industry, or I could create a cryptocurrency to support startups if they want to take finance from investment bankers, and if they want to use a medium for in terms of digital asset or transactions. Or even if you go to Chandigarh, there is a startup in Chandigarh which is actually using cryptocurrency to transact and as a barter for people to grow like crops. So people grow crops in their houses like tomato and brinjal, and then they sell to each other in the community using a cryptocurrency called a stress store. So there are a lot of examples and applications of cryptocurrency. Distributed ledger technology. So blockchain has another name called as DLT. Remember, I told you that blockchain means it is distributed in fashion, and the ledger, which is typically maintained by ICICI as a centralized authority, in case of blockchain, it is maintained in a distributed fashion. Okay, and it has become very popular. This slide says that there are 24 plus countries which are investing in distributed ledger technology. 2,500 plus patents are filed over the last 3 years. 90 plus corporations have joined the blockchain consortia. Actually, 90 plus central banks have engaged themselves in this discussion, and over $1.4 billion investments have been invested over the past 3 years in blockchain startups worldwide. So some of the applications of blockchain, banking, I told you about transactions, okay? Even healthcare. So now when you start talking about healthcare, you talk about sensitive data about patient records, right? And you want to maintain the patient record in a way that it is actually very safe and secure, and it can be accessed whenever needed. So healthcare startups and companies which are using blockchain as a technology to maintain those patient data and provide it to people like R&D houses or for clinical trials on demand. There are smart contracts, which are another very important application of blockchain. So in case of supply chain industry, if you are transferring money, or sorry, if you're transferring goods from say Mumbai to Delhi, there will be a lot of parties involved, right? The shipping company, the logistics company, the exporter, the producer, the importer, the insurance company, which is insuring that goods while it is on the road, and so on. So there will be typically 10 to 20 people involved in a end-to-end supply chain of, say, mangoes, for example. Um, Now, what happens in today's world? Each of them transact with each other on a one-to-one basis and do some contracts between each other, but there is no mechanism to look at the contract end to end. For example, the mango producer in Maharashtra, all the way, who's actually transporting the mangoes, and then someone who's actually importing that, or getting that mangoes in Delhi and selling it. They want to have visibility where they can see what is going on in between, and smart contract is actually helping to enable that nowadays. And we can talk about smart contracts offline. but in the interest of time, we'll move forward. There are other applications like security in IoT as well. Even in voting systems, some companies are trying to verify if the vote was really legible by using blockchain. And then there are public record keeping systems and so on. You can take a look at this slide. I think the slides will be shared post the webinar. But the blockchain ecosystem is pretty huge. Actually, it is bigger than the one shown on this slide. But there are multiple players here, as you see, people who are working in the currencies area, the people who are developing tools, the governments and the sovereign institutes, uh, even the fintech companies and the banks, and so on. So I think we'll now talk about process automation. So far we have covered banking channels, financial services, and blockchain and cryptocurrencies. Now let's talk about process automation. And here we will talk about robotic process automation and also briefly talk about a use case in insurance industry. So what is robotic process automation really means and why it is apt for financial industries. RPA is a use of software which is combined with artificial intelligence and machine learning in order to handle high volume, number one, repeatable tasks that previously were done by humans. Okay, for example, you want to do an auditing task or you want to maintain a record of transactions and just run a query for a purpose of preparing a report, or maybe in case when the auditor wants to monitor your books and come and look at your financial transactions. So basically it's very simple actually to understand. The idea here is that if there are a lot of processes which are done manually, and if I can automate the tasks which are repeatable in nature by using a combination of two things: one, by looking at the nature of the task, and two, understanding where I can actually create a model which can even improve itself over a period of time. So that's why machine learning, right? Machine learning basically means that you look at a model and you look at the data which is inputted to that model, and you try to learn from that input data and improve over a period of time. Okay, so financial industry, which is one of the most heavily regulated industry in the world and has a mandate for high security, high reliability, auditability, and data quality, they are one of the most apt industry to automate the manual processes and hence save time, money, and also become more transparent in that process. Let's talk about example in insurance claims industry. So when you do insurance claims, actually one of the area that is very manual even today is doing the claims processing. It is very time consuming. It's the process is very complicated. You basically go to an insurance company or to a dealer and you will say, hey, I hit my car today and I want to file an insurance claim. Then that dealer or that maintenance garage will actually make a call to the insurance company. Let's say it's a cashless settlement. Then they will prepare a report, and then basis of the report, they will say this is the amount of money that will require to fix it. And then there will be a process where the insurance guy will come, do a claims verification, and etc. So there will be a lot of time lag and very manual nature of doing a claims management. But in case of RPA, there are ways where you can adopt a robotic process automation in combination with technologies like IoT to do auto settlements of claims. For example, let's say I hit my car and my car has a sensor which will typically tell exactly what happened during the time of the accident. And when I go and file a claim, my insurance company can get a data from my connected car, where it will tell them that I hit my car from the front, the headlight is broken, and now I want to repair the headlight and get a new headlight, and I want to process a claim for that. Just an example. Because of the data and the technology where my sensor was able to transfer the data to my insurance company, they can automatically know that what really happened during the accident, and they don't have to send a guy to look at the claim. They can probably approve the claim after it is submitted by the garage automatically without spending the time in the manual checks and balances. Now what will happen is, because of RPA, what they can do is they can actually record all this data into a centralized system or into a server, and they can automate the entire claim settlement process as well in terms of payments, verification, and validation. That's why insurance is one of the area which is very typically apt industry for financial services or financial technology. I don't know how many of you have heard the term called as UBI, usage-based insurance, which is becoming very popular. It's actually very popular in US, where companies like Progressive, they give you a device which you connect in the car, and based on your driving pattern, they give you a discount on your premium of the insurance premium. And even in India, ICICI Lombard is piloting that. So that's a very good example of actually combining the data from the car or from the automotive segment and the data during the time of the accident, and processing that insurance claims automatically. Okay. Another example is financial accounting, where a lot of data entry has to be done manually. So if you combine machine learning and use RPA, industry says that you can save almost 10 times the investment that you make. And the last is, of course, other examples could be policy administration, invoicing, business travel, auditing, and etc. I just want to give an example of a company called UiPath here, which is a startup that right now has a valuation of up to $1.1 billion. What they do, they specialize in robotic process automation. They leverage the technologies such as computer vision. So let's not go into the depth of computer vision, but let's understand that what they do, they use CV as a technology which can actually process the data in its environment through the help of sensors and other things. And it operates in user interface to overlay of software where they can accurately predict what is going on with the human user around it. In fact, if you have heard of the product called as Amazon Go, where Amazon launched a retail store in the US where you don't even have to do a checkout. The moment you pick a product from the shelf and put it in a basket, it will automatically get recorded into a cart. Even the bill will be calculated automatically. So Amazon Go uses something called as computer vision combined with Bluetooth technology and other technologies to calculate what exactly you're picking up from the shelf and what is the price of that product. So that is something which is adopted in RPA industry as well. And then there are other companies like Automation Anywhere, Blue Prism, and so on, who are gaining a lot of traction in the RPA industry. This is just an example from Forrester Research, where they say that RPA as a technology will likely mature in 5 to 10 years from now. That's why there is a cycle here which says that what is the typical point at which RPA exists in the industry right now. It is right now in the growth phase. So if you see at the x-axis, it starts from creation, survival, basically whether the technology will survive. Then it goes into growth phase, after which it comes stable into a stable equilibrium phase, and then finally there will be a decline of the technology. So every technology has a cycle, right, where it becomes very popular, maybe becomes stable, and maybe sometime it also starts declining as a usage. So our RPA is somewhere in the growth phase right now. Now let's wrap up our session for today. Since we have covered banking, payments, alternative lending, blockchain, and areas like robotic process automation, and of course the applications of AI and ML in all of them. If you look at this report from CB Insight, what it says that approximately $77 billion have been garnered as a market value or market cap by 26 fintech company, which are listed here, and some of them are in India like Paytm, okay, and then the others are in China, Europe, and US. So I think what we should say that the fintech as an industry has arrived. It's the right time. If you have not already invested yourself to become a fintech expert and enter into this area or learn about this area and look for your career if you are aligned with financial services or technology. And there is a lot of scope in multiple areas of applications, all the way from like banking, financial, investment banking, insurance, and all the way up to tangential services, like the one that we talked about in example of Uber. US banks, for example, if you see here, the top 10 US banks are investing in fintech, and typically they are investing in areas like, if you see in the left hand side, Goldman Sachs, Citibank, JP Morgan. This is just an example here. On the top, there are categories. So you see blockchain and data analytics is the first set of category where most of the investments are done by the banks. And then in the second category, which I have circled around, which is financial services, lending, payments, and settlements. Okay, so I think we have covered all this in as part of our session today, and they are the areas which are really picking up as a technology. And of course, there are other areas which will also come on board, like supply chain, regulatory technology, real estate, private wealth management, insurance, and personal finance. Important point to note: these companies, which are traditional investment banks or pure banking services, or a combination of both, they have invested aggressively over the last few years. Although the numbers are up and down over a certain year period, but I think they have realized that they cannot just stay as a traditional banking or services company, but they have to innovate themselves. So that's the end of the session today. Just to summarize the webinar today, what we have tried to understand or cover are the basics and maybe a breadcrumb or summary of different areas of application of financial technologies. Combined with, of course, under the financial technology, you can say the mobile applications, artificial intelligence, machine learning, augmented reality, and other services like blockchain technologies. They all actually come under the umbrella of fintech in some of the other fashion, and they help companies to create more and innovative models to touch with their customers, or create more stickiness with their customers, and provide services which are more transparent, more faster, more readily available, highly mobile in nature, which means the mobility is very ubiquitous in nature, so you can access them anywhere, anytime you want them, even in the night or in the morning. And they're giving you alternative ways or doing your uh, traditional way of transactions for either selling or buying gold or loans or other assets, which are financial assets. I have not touched about specifically about equity or fixed income tradings or mutual funds today. Even they come under the umbrella of financial technologies. But I would assume that uh, you have heard about them or learnt about them through other mediums. Okay, so that's the end of the session today. I think we can start the Q&A, or if you want to do the poll first, I don't know.
Yeah,
Yeah, go
so
on.
yeah, everybody has responded to our questions. So, Joy, 69% of candidates are yes, and 31.
Sure.
Okay, so you can.
Sure.
Thank you.
All right. Well, yeah, once again, Hina, I think for like the Q&A round, right, I might need your help because I'm on my phone, so I'm not able to view the actual question itself. So in case there's a question that may come up in the chat box, I might need you to intervene with the audio connect instead.
Sure, Joy, sure.
Uh, right. Thank you. So again, before I get started, I'd like to first, quickly thank Vinay for his time this evening. I think this, as in the entire, presentation has been extremely insightful. Um, just before we move ahead, could I request if you could just complete the poll? I think it's still showing on the screen. If you could just, yeah, that's fine. It's done. That's fine.
Joy,
Thank you. Uh, yeah, Vinay, I can hear
yeah.
you.
There is one more poll question. Do you mind finishing that one as well, the fourth one? That's it's particularly interesting to me, like whether the session
Sure,
was
sure.
useful to the people or not. Yeah.
Oh, absolutely. We should do that first, and then I'll probably just spend another 10, 15 minutes on taking some Q&As. Sure, let's go ahead.
Hello, I have rolled out the poll, and everybody requests you to answer your. Please give your feedback. Thank you so much for your interest, and 81% candidates have shown their interest as they are very interested. So now, Joy, you can carry on.
Sure. Thank you for that, Hina. Again, if I could just request you to close the poll, so that piece just goes away from the screen. All right. So again, once again, I would like to thank you all for being here today with us. I know it's an evening time, people are on the way out from office, and at the same time, I'd like to thank Vinay for his time today. I think like the last, 1 hour, 1 odd hour has been extremely insightful. We've looked at the whole spectrum of everything within the fintech landscape, all the way from like the lending and like the payments ecosystem to like the whole piece on like the RPA which you did recently, as well as like the whole just machine learning piece also was extremely interesting. So I would like to quickly just give all the other participants on this call a chance to ask any questions that you may have. Now these questions could be anything to do with what he's already explained, but I think he's the expert on the domain, obviously. So if there's anything on the domain, that is obviously something that we can share with you guys. I would like to also inform you that we run like a pro degree that we do along with like Barclays as our partner on fintech in particular. Everything that you've gone through today across these slides is basically an accelerated version or almost like a trailer of what you can expect in this pro degree. So this pro degree would start off with like a primer to what is like the financial services space. Then we look at everything within the fintech landscape, and then we move into, or we go deep dive as we call it, into each of the four spectrums of fintech, where we get started with the blockchain. Then we move on to the advanced analytics, where we work on analytics with Python. After that, we move on to like machine learning and artificial intelligence, where we look at certain elements of like Keras, TensorFlow, and like the neural networks. And then how would you use that in an application on the financial services side? And at the end, we look at RPA, where we use something called the UiPath, which is or we use like the community version of UiPath, which is the open source software, where you can build your own RPAs. Again, this is the whole spectrum of the program. If there's any question that you have about this program or about like the curriculum, I'll be happy to take those up. As mentioned earlier, Hina, I don't unfortunately have access to like the questions pane. So if maybe you are getting any questions in the chat box or in like the question box, you can just go forward them to me. I'll be happy to answer those. For like those of you who may be curious about the program, this is like a 4-month program where we get started on the 26th of May. That's like the next to next weekend is when we go live in the next 10 days or so. We get started with, as I mentioned earlier to you, with like the basics of like the financial markets and like the financial services space. And then we move on into like more complexities of fintech, where we cover everything from the payment side to the lending side. We look at understanding how like fintech came into existence itself. And as I mentioned earlier to you guys, this is done along with Rise Mumbai, which is an offshoot of Barclays. It's an accelerator of Barclays Bank, which is the which is like the UK bank, and they've come up with this. So very broadly,
Joy,
if there are no questions,
there
yeah,
is
go on.
one person, Tarun Patne. He
Sure.
want to ask you something. Yes, Tarun, can you hear me? You can ask your question.
Hi, Tarun. This is Joy. Are you able to hear me?
He must be typing right now, maybe.
That's fine. Sure. Or he may need to, I think, just go unmute himself if he's using like his microphone. And if any of you like just other folks also have any questions, feel free to just go put it in like the questions tab, and we'll ensure we go
Yes,
pick it up at our end.
there is a Rudna. She wants to ask you that what are the existing cloud services related to fintech?
Sure. So again, when you say like your cloud services, it's so I mean basically everything today from like Azure to like AWS, all these big guys, they obviously have the ability to go run certain elements of fintech on like their respective environments. I think today everything moves from an enterprise edition to like a SaaS, right, which is like your software as a service. Today, most of these things, if you look at anything on the payment side, even on, in fact, like the lending side, a lot of applications and newer like startups that you have are all done on that basis. What I may also want to do is if you can just go drop an email down to us with maybe something more specific if you may have as a question. I'll be happy to take a day and maybe get back to you, going after consulting like our SMEs who are like our subject matter experts. Because if it is, something too technical, I might not be the right person to answer that question for you. So you can send out an email to us at elearning, that's ELEARNING, elearning@imarticus.com, spelling Imarticus as IMARTICUS, Imarticus.com. And we'll be happy to go take that question on offline and just take that forward.
Yeah,
If there's any, yeah.
There is one more question from
Sure.
Arun M. Is any supply chain finance feature are provided in fintech?
Right. So on the SEM side, we look at a few things on like the supply chain side. In fact, we run like a few projects, right? Because obviously, though this is fintech as a domain, so most of our examples and the case studies that we would run would be around like the financial services landscape, where we would cover everything from like retail banking to BFSI. In fact, that's what Vinay had mentioned at the beginning of the session, where we do everything from banking, financial services, and insurance as three key sectors. And how are you trying to go disrupt that sector? So most of our examples are around the finance landscape. But having said that, if there is a need to get in some more examples, which are on the on like the supply chain management side, or on like the inventory management or warehousing or like e-commerce end of things, we can probably try to incorporate that as well.
Okay. Joy, there is one person whose name is Tarun Patne. I'm going to
Yeah.
unmute him. He wants to talk to you.
Yeah, can you hear
Tarun,
me?
yeah.
Yes,
Yeah,
I can hear you, Tarun. How are you?
yeah, good. Thank you. How about you?
Very well, thank you.
Yeah, so I've worked in traditional banking, in retail
Okay,
banking for a couple of years, about a
right.
decade ago.
Mm-hmm.
So I'm very passionate about this digital space, especially country like India, uh,
Yeah,
and in the backdrop of demonetization and GST and all that. You talked about Africa and other developing countries.
correct.
So, I mean, still there regulatory, I feel there are regulatory issues, and because of that, there are no jobs in the industry. Even the fintech space is very saturated, even though it
Mm-hmm.
is at the nascent stage. If we talk about lending, online lending.
Right.
So, what about if I do this program, what
Hmm.
is it for me? After four
Sure.
months.
Sure. So I'll go walk you through like your whole just question itself, right? So like the first part of your question was with regards to what you've done in like the retail banking space maybe a few years ago, and
Hmm.
how that's going emerging today in like terms of I think
Hmm.
in fact just Vinay had gone spoken about that earlier, right? Saying that you have the ATMs and how they've gone revolutionized the way we use banks. If you
Hmm.
ask me per se, I have not entered like my HDFC bank in the last 1.5 years. In terms of I've not entered the branch. Most of the banking happens online today. It
Yeah.
happens, like
Yeah.
without the need for you to actually visit. All like your KYC documents are done electronically. And I think like, basically say those were the examples which he had given. So looking at like the
Hmm.
traditional banking, the way we see it today is obviously very, very different. In India, I think like you mentioned, you're extremely like passionate about the India story with fintech, and which is extremely evident today. If you look at India, like the whole world is looking at India for answers on fintech. I think that's how I would put it. Like
Hmm.
part of it is of the push by the government to create what we now call the India stack, which is everything
Hmm.
from like the UPI to applications like Bheem, to the infrastructure that you have built around Aadhaar and the likes of it. Today, even
Hmm.
Google, for example, they have the Tez app, which is something that they have gone pioneered in India first, and if it works in India, then they plan to
Hmm.
take it to the world. In fact, I was reading one article the other day where like the University of New South Wales in Australia, they have in fact gone
Hmm.
commissioned like tour to Mumbai, where like 10 different startups from Australia are going to basically be funded for like a 7-day
Hmm.
program to come to Mumbai to go go spend time here and to understand how is it that
Hmm.
India has managed to crack like the fintech dilemma in that sense and go take
Hmm.
that learning back
Hmm.
to Australia. Today, literally, what economies we would look up to, today all those folks are looking at India for answers and like, solutions. So I think
Hmm.
in terms of space, it's extremely like robust. It's extremely dynamic. There's a lot of work going on in it. I think
Hmm.
there's a lot of different players. I think which also brings you to your other point that you made on like the saturation. I think
Hmm.
today there are enough and more people like FreeCharge, MobiKwik, Paytm. This is just in like the payment side, right, or like the wallet side. If you look at like
Hmm.
the lending side, also you have like your micro lending guys, you have alternative lending guys, you have guys that I mean, just to create a lot more inclusion in society because now suddenly, like that farmer who didn't get access to, like funds today has a line of credit. For example,
Hmm.
even like this course that we are talking about, like the fintech program that retails for like rupees 1 lakh, but we have an option where you can even do this interest free, like on like 0% EMI, this thing that
Hmm.
component as well. So you have a lot of
Right.
new ways that you're able to create inclusion of like finance, which was typically not available earlier. So I mean, earlier, if
Hmm.
any kind of student wanted to do this course, he would go to a bank. you would maybe get a loan at
Hmm.
say 15%, which would be an unsecured personal loan, and he would have to go pay that
Hmm.
over a period of a year or half a year or so. Today, you have all these
Hmm.
deep discount schemes. You have like your just subvention schemes that you'd see at Chroma with like all these guys like your Bajaj Finserv, and they've gone and captured the
Hmm.
market the way lending happens today. So
Hmm.
to your second point on like the saturation, I think that's how any new vertical starts. If you look at even like say e-commerce, you would have like
Hmm.
10 like very small players trying to create their own niche, and then there's a whole
Hmm.
wave of like consolidation that comes through where somebody like a Myntra is then bought over by Flipkart, somebody like a PhonePe is also bought over by Flipkart. They create their own ecosystem, then they go buy
Hmm.
out say, along 2 3 other companies, and then they get bought over themselves by Walmart. So there's a lot more like consolidation as any new industry would mature. So even if you
No,
look
that
at what happened with e-com or now what's happening with like fintech, while there would be like 10 players today doing the same thing, it's only
hmm.
about time, when they start getting consolidated and there'll be like 3 4 big players like it happens in any big mature as an industry today, like aviation or like oil and gas or like telco.
Hmm.
You have 3 4 big players, and they are the ones who ultimately would survive. So I think that's where the industry is, definitely headed when it comes to fintech. But I think it's so nascent right now and so dynamic that there's a lot of opportunity for pretty much every angle of it. So if you look at something like RPA or machine learning or lending side, like your fintech solutions, or payment side, fintech solutions, which in
Hmm.
turn, brings me to like the last part of your question, saying that after I finish my 4 months, then what happens?
Hmm.
To that I would answer saying that this is what happens. You get exposure to like to these organizations within like the lending side, the payment side, the NBFCs, which are always like looking at new alternative ways of reaching out to a lot more people. You of course get access to everything from like the ML landscape to, I mean, if you also come from like a technology angle, then you can also create a lot more like algorithms using like the machine learning codes. You can obviously work on things like RPA. All that opens up for you as key sectors, which otherwise you would not have access to.
No, but the thing is, India is evolving right now. Even if you see the industry, so considering it's an online course, I mean, will it have a recognition in the industry? Because if you, even if you see in industry, it's very traditional right now. Human resources people, you know, what will they think about? It's not like Coursera in US. You do a course online, and you skill yourself and you find work. So India is in a an evolving stage right now.
Right.
So
So I agree with your
let's
question. I also agree with your approach, saying that where's like the return on investment? If I'm putting in like say 1 lakh rupees today, then what am I really going to get out
hmm,
of it tomorrow?
hmm,
In a place like
hmm,
India where things like online education are not seen as maturely as they would in the West, right? Which is your question.
hmm, hmm,
So I'll give you one example, saying that like all the jobs that you have today, uh, they were not even in existence, say 5 years ago. Today, like say digital marketing has become such a like pillar of any organization. Today, if you look at any organization,
hmm,
right, be it like a small like mom and pop shop which has gone online on like like e-commerce environment, or even somebody as huge or big as like a Flipkart, they can't do anything today unless they have presence in like the digital marketing. If you look at all the guys today who work as great digital marketing like managers and senior managers, they have only learned these skills on the job because there was no real like curriculum back in college that taught them how to play around with like the bid and ask price on like say or like Google AdWords page. All these things only come with experience. I
hmm,
think where you can try to basically go bridge that, or how can you basically just go and accelerate that growth is by doing courses like this, by saying that you either wait it out, I mean, go allow your organization to go evolve at that pace and then give you the opportunity to go explore yourself in that new age, this thing, right, sector, or
hmm.
you take this shortcut where you're able to go, go garner those skills at a way faster rate and at a much faster rate than anybody else in your competitive landscape would. I think that's how we see all these programs today. Even if you look at like data science, this was not something that was taught in any kind of technology or like any kind of technical education. You would never really learn how to build like a logistic regression model on Python. But I think given that what you can do with these new age or these new online certifications, um, I think there's a huge shift. The other point that you made about like the recognition of these things, I would not completely agree, frankly, because I mean I've been exposed to this space for the last, I would say, 6 7 years now, and
Hmm.
I've seen very clearly like grow up. I mean if it was not recognized in the industry, like why would our partners partner with us for something like this? Why would Barclays come on board as a partner for something like this? Why would EY do something like that in financial modeling? We have other partners like Genpact, IBM. All these courses are run online. So I don't think online today is seen as a bad word anymore. I think if I ask you the same question, when was the last time you booked like a railway ticket or like a plane ticket by going to an agent, you don't have an answer
Hmm.
to that because you do it online now, right? So that online will
Hmm.
go disrupt, different industries at different times. So even if you look at something like a movie ticket, you don't anymore go to the theater like 2 days before buying a movie and then go buy a movie ticket, right? You buy it online and then you just go there once and for all. So I think like that disruption comes at different phases and stages, and I think this is in economics they call it like the bottom of the J curve. That's where it is in the education side. So you're going to see it exploit. You're going to see it go like berserk, if I may use the term. And I think that's clearly what's happened in the West, and it's only about time when people start seeing that merit and that value back home in
Yeah,
India.
yeah. Yeah, yeah, we are
And I
evolving.
think
The only thing is, yeah, yeah, the
yeah.
only thing is, in terms of because there are no jobs in India right now, economy is not growing. But
Not true, yeah. I would not. I mean, I don't want to. I mean, I also want to, get some other questions in, so I'll maybe just go conclude this point. And I'm happy to go take this, like, I mean, offline with you if you want to get on a call, maybe sometime tomorrow. I'll be happy to
yeah,
go
no,
assist my team to do that.
yeah,
But
yeah, yeah.
I think there is a lot more potential in India than there is in any other market when it comes to fintech, especially. I think
Hmm.
like these just kind of jobs and the vacancies we are seeing, and like that is skill set gap essentially that we are seeing is I think even more so in India than any other economy.
Hmm. Okay.
Do we have time for another few questions there, Hina? I know it's about 6:30. We're about 30 minutes over time, but happy to take some more if maybe one or two more questions.
Yeah. Just a moment.
Yeah, if you could just go summarize maybe a couple of questions, I'll maybe spend about 2 3 minutes on each.
Yeah, there is one person whose name is Rudya Raj. He
Yeah.
wants to ask you, what about jobs in fintech? No, I'm so sorry. Do you provide any certifications for application developers focusing on fintech?
Sure. So again, I'll just
Should I repeat the question, Joy?
Okay, I would just assume that's the question and just move ahead with that. So, to be honest with you, no, there is like no direct certification that you would get at the end of this course that would certify you as like an app developer. But obviously, you would be getting like a participation certificate and like a completion certificate at the end of this program, which would be a like co-branded certificate along with like our partners, which is with Rise Mumbai, which is by Barclays, obviously, and like the other one would be with Imarticus. So this is like a co-branded certificate that you would get at the end of completing this course. As I mentioned, this is a 4 month program. It's an online program. You only need to attend it on the weekends. It obviously would cater to guys who have like certain level of experience. Also, to like a like just to also like a lot of freshers who would probably be doing this for the first time around. To give you a split of the existing batch that we have about, I would say, 35 to 40% of them who would be freshers. I think about 30% of them would be about freshers, and 70 75% of them would be like guys with experience of anywhere between 3 years to 7 8 years. We have one person who's actually about 40, so he's got close to 20 years of work experience.
Yeah. So next question is from Mahalakshmi B. She wants to ask you that is that a fintech course open to pure finance grades not having a technical background?
Right. Thanks for this question, Hina, and I'll just quickly answer this one. Um, Again, to answer you over here, right, Mahalakshmi, I just get a sense from the question that you were a little like fearful of like the technology side of the course, saying that I may be only from the finance side. I may not know too much about technology. So when you talk about things like linear regression with Python, I'm not very comfortable with something like that. If that is the approach and if that's the background, I would like to tell you that you're not alone in this. Um, I don't know the right number right now, but I would assume 3/4 of our of like the people in the existing batches are from an MBA, like finance background. They don't come from a technology background at all. The whole purpose of this course is to allow different candidates from different sectors to come together to learn fintech. So we have not kept it very heavy on like the technical aspects. We have kept it very simple on the technical aspects. Today most of the technology does not run on code, but on trying to understand what are the existing templates, and how can you use the open source environment to your advantage. So the whole course has been created around things like primers and the introductory level classes, where you would get access to these primers, where you would just go spend about 2-3 weeks getting the basics in place, and then you would deep dive into the topic. So even before we would start, like blockchain will give you a good sense of like the whole background to what is blockchain, why does it exist. Even when we move into something like your machine learning piece, we'll give you first the whole knowledge of why do you need machine learning, what's the like whole component of machine learning. It's a lot more on English than it is on the whole just tech side. So I don't think you should be very concerned, frankly, if you come from a finance background. This is not a very heavy tech program. At the same time, I'd also like to tell our like the other half of the class that even if you come from like a technology background, you don't need to be very worried, because this is not a die hard program on finance. We have these primers in place that give you an overview. It gives you an introduction to each of the components that we take you through. So when I talk about something like the payments ecosystem, it should not scare you as a word, because it like essentially means the whole world of payments, and what happens in the different kind of applications that you have within payments, within lending, within fintech, within like blockchain, etc. So yeah, I wouldn't worry too much if you are just from like a finance background. It's not something which is very heavy on things like technology.
Okay, so there is a last question from Adnan.
Sure. Yeah.
He's saying that do we have to purchase or get subscription to any of softwares that will be taught in this program?
Sure. So hi Adnan. I believe you've been in touch with our team. I was just speaking to them, and they had mentioned you in like passing. If I'm not mistaken, you may be the same person. Right. So to buy technologies and tools, no, you don't need to. The only reason I say that is because all of this is being based on open source platforms. So yes, you will need to say download like the UI path, but all that is like the community editions or the open source editions we use. Yes, you would need to download something like Python, but again, that's an open source environment. It's like this, just free to all application. So we've purposely kept all the tools in the open source landscape, so you don't have to further pay even like one dime to get anything over and above what you pay for like undertaking the program.
Okay. Thank you so much, Joy. Thank you so much, everyone, for attending this session. And I hope you have enjoyed this session. So you can visit our website, www.imarticus.com. You can, if you have any question or if you have any query, you can go to our website, and our concerned person will get back to you on call. Thank you so much, everyone.
Right. Thank you for your time, everybody. Have a good day.